Order! Order! You are an incorrigible delinquent at times. Behave yourself, man!
Well, following the referendum result, the outlook for Britain's financial system is challenging. That's according to the Bank of England Governor, Mark Carney. He promised to change the rules to ensure big banks keep lending. But the pound fell again today to a new 31-year low. And there's also evidence of the Brexit contagion spreading, with concerns about the UK commercial property market in particular. So our business correspondent, Helia Ebrahimi, is here. Just tell us a little bit more about that promise from the Bank of England Governor.
Well, we might be experiencing a power vacuum in Westminster, but there certainly doesn't seem to be one in Threadneedle Street. This is the third time we've heard from the Governor of the Bank of England since the Brexit vote. We know, for example, that interest rates are likely to fall. And today we had news that there's this huge reversal in bank regulation. Ever since the Lehman collapse, banks have been pressed more and more to hold more capital, to make them safer institutions. Well, today they were told they could scrap that top layer of capital. And because of the way banks work, £5.7 billion of capital, which they can now do without, amounts to £150 billion of lending to the real economy, or at least that's what the governor hopes. Let's have a listen in.
This is a major change. It means that 3/4 of UK banks, accounting for 90% of the stock of UK lending, will immediately have greater flexibility to supply credit to UK households and firms.
So will it work?
Well, the fly in the ointment is that there has to be demand in order for banks to write these loans. And viewers may remember in the aftermath of the financial crisis, the funding for lending scheme was brought about. But a lot of companies complained that banks weren't passing on these funds, and a lot of banks complained that there wasn't the demand in the market. So given the governor has warned that the trajectory for the UK economy is negative, it's hard to see a lot of real businesses queuing up at their bank manager's office and asking for more money.
Now tell us, what is the worry about the property market?
Well, the dominoes are starting to fall in the UK commercial property market. In the morning, we had a warning from the Bank of England saying they would have to look at commercial property funds in terms of systemic stability. Well, by the afternoon, 3 of Britain's biggest commercial property funds, Aviva, M&G, Standard Life, had all been suspended because of redemptions as investors flocked to the door to try and get their money out. And this is very reminiscent of the kind of stuff that we saw around 2008. So a lot of panic. And as you said, it's what sent the pound to a fresh new low, now hitting $1.30. That hasn't been seen for 31 years. And the issue with commercial property is that for a long time it was retail banks that were investing in that sector, probably the reason why we ended up as taxpayers bailing them out. But now it's retail investors trying to get better returns than on gilts or their savings account, so they could be hurt. And on top of that, 75% of businesses, small businesses, use commercial property as collateral. And if property values plummet, that could mean a lot of those companies become unstuck.
Helia, thank you very much.
I've been getting